Okay. Hello guys, welcome everybody to day 12 of the trading marathon here on this channel. My name is Daniel, and in today's video I'm gonna give you an overview about the risk management section that we're gonna discuss in this video course. There are lots of different risks that we need to prepare ourselves for if we're talking about trading in general. I know some of you might only think about market risk right at the moment, but I'm going to introduce you to the spectrum of different risks that we are going to face on the journey as a trader, or that you are going to face in the next years. And it's it's essential that you at least know about the exact risk and the severity and the likelihood of each risk of happening, so that you can at least prepare yourself and calculate that into your strategy or plan or whatever. So I'm gonna give you a quick overview about the section, and I'd like to start this section with a mind game. It's a simple thought process that I want you to follow in order to understand the several types of risk, or the type of way you need to interact with risks in order to succeed in trading. And for this example, I'm gonna need you to think about a casino and the way how it operates, because actually you can see yourself as a trader, as a successful trader, operating in the best case the same way as a casino does. I'm gonna explain this to you, and I think once you understand it, you will be able to follow that in all the aspects, but you need to understand the thought process here in this example. So as a casino, your whole business is based on betting. Your whole business is based on chances and likelihoods, and your whole business and your whole income is based on possibilities of things to happen. And there are actually, or you might even think that there are a lots of different possible outcomes for the casino itself. But I can tell you right now that in average, the casino is performing, or every single casino is performing, as long as it has enough people going there, it is performing very consistently. Why is this the case? Well, let's start with the fact that every single casino, depending on its size and its bankroll, has a certain maximum betting size. And what you need to understand is that theoretically, if someone would go there and ask them to exceed the maximum betting size by 10x, they must neglect it. There is no way a casino can accept something like that, because if they would, there would obviously be the option that the casino goes bankroll within one roulette spin or one blackjack hand. And I can tell you right now that's simply not possible, because no casino ever would allow something like that to happen. That's why they have this maximum betting size, because someone has calculated that with a certain bankroll, with a certain amount of money you have, and a certain amount of people playing this game, and certain odds of things to happen, what is the maximum amount that they are allowing themselves to risk per blackjack hand or per roulette spin. Because in every single roulette spin and every single blackjack hand, the casino has a very small advantage. In every single game, the casino, whatever you play there, if it's slots or if it's roulette, if it's whatever you play in the casino has a very small house edge. And it's like a 51, 52, 53, in some casinos even 55% win rate per whatever spin, pressing the button, whatever. So a very small edge that the casino has per interaction with any user. And they know that since the maximum betting size per interaction is, let's say, 0.5% of the money from the casino, or of the bankroll of the casino, or 0.25%, or maybe 1%, every single casino has a different set of rules, or different betting size, or different calculation for this. But they know that if someone comes a certain amount of times to play their game, and let's say if they want to gamble a lot of money, they, with this betting size in place, they will need to attempt it a lot of times. Let's say someone wants to gamble $1 million, but the maximum betting size is only 50K, so they will need to at least 20 times make an interaction with the casino. And then, because of this, only because of this, the casino has 20 times this 55% likelihood of winning. And added up over time, it ends up in a way higher likelihood of the casino winning than if they would just spin once and have this 55% likelihood only one time. Because you must understand that likelihoods are multiplied and not added. So for the likelihood of event A and event B to happen, both at the same time, you must not add the likelihood of A and B, you must multiply them. And that's why the casino has such a high edge with a higher amount of attempts from different players, because this is kind of like an exponential edge that the casino is getting the higher the amounts the players are betting. So you must understand that if you are a player and you are going to the casino, your highest chance of winning if you go there is if you just go there and try once. If you go there with a big budget and interact 100 or 200 or 500 times with the casino and always risk a very small percentage of your money, the casino will over time gain a huge advantage and take all your money. And in the market, it's very vice versa, because you are the trader, you know the chart and you have this advantage. So if you go there and bet all your money on one trade, it's like the casino going all in on a roulette hand. The casino would never go all in itself on a roulette hand. They would always only risk 1% maximum or 0.5%, because they know that over time their edge is increasing and so they will never go bankrupt. So if you as a trader always bet on setups that have let's say 60% likelihood of happening based on the Elliott wave theory, and you will do it only once, yep, well then you have a 40% likelihood of going completely broke. But if you make this one simple bet with 1% of your money 100 times, your edge will increase way over the 60% and you will very likely have more money afterwards than before. Because over those several attempts, you will gain your leverage over this. Yes, it's like that for the casino and it's like that for you as a trader in the market. And you must understand that you need to really act like a casino. Also, the other types of risk, I want to just go through them. We will have several videos about the several types of risk and how you can avoid them specifically. But you need to understand that there is not only the market risk, there is also the so-called most important man risk, because you are the trader. You don't work with some other traders which handle your capital. So you are the only type of person who makes any decisions. So if something is wrong with you, like as we discussed in the last video, if you have a mental condition or a drug addiction, or if you are just in a state of madness because of whatever reason, it will be a huge problem, because you are the most important man on this whole plan, okay? So you will also obviously have the legal risk. Yes, there can be lots of troubles in the legal sphere, but I will introduce you a little bit to that in the upcoming videos. You will obviously also have a tax exposure, and there's the risk that you are not handling that well. So we will also, I will also gonna be talking about that topic. There is obviously also the risk of human failure, so that simply you just make a mistake that you didn't expect to make. I mean, in case you're doing social media as a trader, there is also some kind of reputational risk involved. But as long as you're not doing social media, there you will have no reputation risk. But if you want to go very far in the trading sphere and make yourself a name and maybe become not only a good trader but a great trader, then probably you will have some reputational risk. If you're not only using your own money, there will be obviously credit risk involved, but I'm strongly advising to not take that on at all, but we will be talking about that in the section. And obviously as a trader you're in most cases a one-man show, as long as you don't have a trading company running the whole business for you. So there are all the general risks in life that you may not think about right now, like you get injured, you lose your job, maybe one of the payments you did expect is not coming like you expected it to come, you get robbed, you're facing another difficulty, some tragic loss in the family which takes so much of your mental sphere that you have difficulties concentrating on what you should do. You know, I could name hundreds of things that could technically happen to you. You must know yourself what is applying actually for you, because I don't know you and I cannot know or predict in which life situation you are and what exact risks you might be facing. But I'm just listing the different options here and some things that we are going to talk about in the risk management section overall. And you need to understand that, as I told you previously, not only likelihoods are getting exponentially bigger when added up, also risks become exponentially bigger and more fatal when added together. Not only that, it's more likely that one of them is gonna hit you. If many of them are going to hit you at the same time, the damage is even more severe, because you don't have the financial power or mental power or physical power or time availability to handle the problem as if only one of them would hit you. So you really need to prepare for the several different types, and you really need to understand the likelihood and the time of those events possibly happening, and we're going to talk about that in the next, let's say, 5, 6, 7, 8 videos. I'm not sure exactly how long it's gonna take, but I will give you a very good overview about what you need to take care about. Genuinely, I'm a risk taker. You need to understand that. I am a very risk-friendly person, and I was a very extremely risk-friendly person when I was younger. It was even unhealthy. I took kind of like every risk that came along my way. Yes, but over the years, as a trader, I have learned and I have experienced that you need to at least understand your risk very exactly and predict the likelihood and the damage of this event happening very detailed in the future, so that you can really take the risk with a good and clear conscience, and also know how to react when something goes against the primary expectation. Okay, so yes, I think, or I hope that gave you a good overview, and I hope you are looking forward to the section. I'm definitely looking forward to introduce you to that whole chapter. Also, last but not least, we are going to talk about the exact risk that you need to take in your trades or at your trading strategy in order to have a long-term chance to success. And also we are going to talk about the differences between the risk management of your own money and a possible prop firm account that you are going to be using. I think that's all about the topic for today, guys. Last but not least, here's the daily house marathon that I ran today. So number 12 is done. Thanks for watching until the end, and we see each other tomorrow in the next video, guys. Stay hard. Ciao, ciao.